Hey, what's going on, guys? Hope everyone had a great weekend. I'm feeling a lot better, so this should be a lot more of an active week from me. Last week, obviously, I had pretty severe flu. Pretty much over that now, just a couple mild symptoms. But yeah, looking to really tackle this week and jump into it. It's going to be a good one. Obviously, we're kind of in that period that I've talked about between the February OPEX and the March OPEX, where we could still see some kind of decline or any rallies, in my opinion, could fade. And we have pretty much the perfect reason to have a gap up over the weekend, and it can, multi-day rally that could just result in a lower high. So I don't want to say dance yet, right? I don't think it's the time to be maxed long just yet. But we have a couple charts that I do want to keep on watch. I was talking about this all last week. It really just didn't give me the entry criteria that I was looking for. But you guys can see it on the screen. First one I want to talk about, if we do see a rally, and let's say this one is able to reclaim a couple levels and then not sell off under that, I think there's a really good long potential here on Google. As you guys can see, just going from our most recent major swing low from down here at this gap to our swing high, this pretty much pulled right down into our discounted 618. Good volume that kind of came off of that lower wick. Obviously, a lot of this was sell side pressure, and we can take a look at that on the daily, right? A lot of it was just kind of increased volume on the sell side, and then the most volume came on Friday for that rally. But it is important to kind of let this one play out still. I'm not saying to take the long off of the 618 here at 170, but just let this have a bounce and push back up into this progression gap, right? This is going to be a big spot for sellers to try to hold. Right, obviously I'll kind of draw it out. I would expect maybe like a push up and a flag, right? And this could be an entry off of a divergence. Or if we can get a break above, whether it's a gap up through that and a pullback or a breakthrough intraday and a pullback, right? There's another possible entry point at 175.37. And I'm really adamant. I think this ends up kind of pushing up into this 179.70 to 170 or 180 level, right? And then we've talked about this. It becomes even more important if we can then somehow break above this 182.85, which is the top of the progression gap. We can turn this into support, right? I definitely think that this has a ton of potential to mark up through this footprint candle or this post earnings candle, right? This is always really important. I always recommend you guys mark this on your charts, where we look for a break above that, some kind of hold above the footprint candle low, and then I think we can easily trade into this earnings gap fill, right? Which is from, like, if we're just going to go the candle high, like 192, 193, all the way up into 206, right? And this was kind of my idea when I lost, right? It was kind of taking the longs initially off of this and then waiting for 175. Clearly, we didn't see any buyers come off 175, and that's when I closed pretty much everything in my account. But yeah, don't dance just yet. I want to emphasize that. This could just be kind of like a weak rally where we end up kind of pushing up and hitting this 175, and then it sells back down much lower than what a flag would be, or some kind of divergence. It's important to watch that divergence. If we do hit this and sell down, we want to make sure it's pulling back on low volume. Or you can play it ultra safe and just wait for it to breach 175, right? And let it hold here. Let buyers establish, like, hey, we want to have relative strength versus the market if the market's weak, or, right, just kind of holding with the market being strong, right? And this is a very, very important level, in my opinion. So I want to keep an eye on Google. To add a couple confluences on this as well, you guys know I'm not a big trend line trader, but if we kind of just look at this from our most recent swing lows, right? I mean, this is a very easy spot, right? Kind of this, I mean, you could even tie it back even further, right? If we end up kind of pulling this back to here, right? Wouldn't be a perfect touch that way, but you guys can see building out a really nice obvious trend. I don't really know how else to word it, right? We just had higher lows throughout the weekly, but if we connect this trend line from here, obviously a little bit of a sweep below here that baited this gap fill, and then now we're getting a nice little trend touch on this. We're getting a 618 touch, so there is the potential to see somewhat of a relief rally, but we need to see that 175 level reclaimed. If we see that or that divergent flag, I'm going to slam the 180 calls, guys. I said I was going to take a 10K position if we kind of got what we wanted to see. Last week, it really didn't give us that opportunity. I know I was mentioning this here, right? I think it was back. Yeah, it was back here when we were kind of consolidating here. I wanted to see us break above this this Wednesday low right around here. If we mark this out, we just never really got above that, right? We were kind of consolidating here, and obviously we went lower, so I never took the position on that. But if we can get a rally, right, and hold above 175, I think we can slam the 180 calls. with a relatively short expiration date. I don't think it needs to be anything further than like April, probably like April 17th, I'm thinking. 180 calls should probably go pretty heavy into that one, and I think we can get a big move up into 180 and potentially an outlier move to like 180, 285, and then we can roll off of that. So this is going to be a big watch if we do see some strength in the market. We don't see relative weakness. This doesn't end up being some kind of LPSY where we end up getting a sharp rally up on low volume and then the market sells again, right? If this can show some kind of strength or some kind of indication it wants to hold pretty critical levels, in my opinion, I think Google is going to be one of my top longs. Obviously, MU is up there as well, but I like this chart a ton. Okay, everybody's favorite chart, right, the one I've been talking about for like 4 months now, MU, right back into some key levels here. Remember, we want to be taking a majority of our positions in this lower realm. We don't want to be taking positions up here, right? This is very, very simple, I guess, example of premium versus discount. We're in discounted range, so we do want to be taking some size on this. If you guys don't already have some, right, you guys should have a little bit of June, July, or shares, right? I have both of those. But it's important, right, to kind of let this reclaim levels once again, right? This pulled down and kind of broke our important 95.66 spot, which is unfortunate. I had this bearish engulfing here. I think this was on Thursday. And then on Friday, we put in a nice little candle. Nothing super dramatic, which is why I didn't add, but we took a nice little position, not saying I took anything, but a position off of this previous gap fill from down here, right? You guys can see it kind of undercut it a little bit. Had a major undercut here with a candle close above. This is what started the rally, and it pulled right back down into this level, right? 89.87, and it held this pretty nicely, right? If you take a look at this from a different perspective too, I mean, we are at the bottom of a range, so it's not, super dramatic, but we are putting in potential higher lows, right? So we have a low here, higher low, kind of like a range here, and then we put in a nice little steep correction and a bounce for a potential secondary higher low. Really though, we want to see this pop back above 95.66, right? And to tie this level in, right, we have our little gap fill here, support from the bottom of this previous range here. This also bounced from here. This became a resistance in this general range. This is also this little gap fill from back here, right? So big level at 95.66, or just that general 95 spot if you want to round down. And this could be another opportunity to add some more size into this one and then look for that completion of the gap at 109.17, guys. This is a big, big level here, right? And I think I have this off just a little bit because that's the open. So technically, yeah, 109.23, just a couple extra cents. But I can't emphasize enough, right? If this does fail, right, got to be able to have some cash on hand if this is to kind of sell, right? I said I want to be able to have the opportunity to add into this 81.50 heavy, right? I want to save like probably 60, 70, 80 grand for a position full size off of 81.5. I would add shares. I would add the June, Julys, which should be really, really cheap at that point, off of that 81.5. But this is probably still my biggest idea. I'm not going to keep my eyes off of this chart. I'm still going to talk about this chart every week, every day. I'm going to be looking at this chart and just kind of reviewing it. But overall, right, pretty healthy, and got to view this as just a discounted opportunity to continue to add. We just want to see it get back above 95.66 because it is a little hazy down here. Even though it is a simple, progression gap touch, potential higher lows kind of forming on the daily here at the bottom of this range, we still need to have levels reclaimed. It's important to have that so we can objectively view this from a risk reward perspective and having stops at certain levels, or just having levels that you can objectively add at, and then if it breaks that, you can wait for the next level below, which is obviously not 81 being our bottom. But weekly looks pretty good. Weekly looks pretty good. Only concern here is SMH. SMH looks kind of wacky, right? Doesn't look the best. Obviously, to undercut a little bit under this 239 level. Really strong weekly bar that kind of sold under. There's a little bit of I guess lower wick here. Nothing that I view as like I need to add into this dramatically just right now. Still want to see it get back above 239, and I think this has a good opportunity. But SMH, this is why I'm being a little bit tentative here, right? This looks like it could be trying to get people to go short or knock out a lot of the long positions. NVIDIA, obviously, was the forefront of that. Congrats, I guess, partially for catching this. I mentioned this on the scan. I was a little upset that I didn't just like re-add this again. Even though I took a 4K loss, I could have just added up here, but I think this could be bottom on NVIDIA. Not entirely sure just yet. I have to readjust my levels, but it basically came right down to 118.65, which was this lower gap fill from 2.4, and had a pretty good bounce here. Not the highest volume, but a nice little reversal bar potential here. All right, if this can push back above and get back above this little swing point here from this what is this, the deep seek gap, right? Maybe hold 128.4. This could give us an opportunity. And I wouldn't say just trading NVIDIA, but just semis overall, right? So I'm kind of tying it all together with my MU positioning. And then we'll take a look at Tesla really quickly because that's the only other chart I'm really interested in. And we'll jump into that one. All right, so Tesla, once again, kind of speculative here. I'm not being too overzealous with this balance. I still think it plays into an LPSY across the market. But can't ignore where this bounced off of, and Tesla's Tesla, right? I talk about this name a lot. I think it's going to go way higher. I ended up selling the shares that I bought right around 324 or wherever that gap was, 323. We got a nice little bounce off of that into like 370. And then I sold out a little bit less than for what I bought it for. I want to get back in, but as of right now, right? I mean, you guys can see pulled back down really nicely into the 200 MA. Also into this little gap right here at like 275, and you guys can see same exact situation from our swing low or our consolidation low to our swing high. It really bounced right off the gap and the 618. So pretty picture perfect spot. But once again, I'm not going to just like blindly buy this. I think a really good indication that this is going to potentially start to move is just a move back over 300, right? If it can get over 300 and we jump out to the weekly chart, you guys will see it's this old high here. Obviously, it's not too much of a confluence. It was just one singular high from like July. Where this really gets interesting for me is if we can get a change of character, right, and really break through this kind of like break a structure level right around 324, right? So we need to get a move back above this break of structure, right, which was this kind of like gap fill back here at like 324. You guys can clearly see gap fill here. We ended up kind of filling it here, and then we knife through. So this is a really good confluence point. If we can just get through 300 and then press up into 324, right, and base 324. If it can make some kind of support out of this old gap, right, this old gap, this old kind of break of structure where we kind of broke down through, I think Tesla has a good opportunity to go long for a move back up into 386, right? Clearly, we would need to get through this old level here, whether you tie it into 358, which is this high from back here. I would kind of use this lower high as my gauge. So, worst case scenario, this just goes back to 367. But longer term, right, if it can kind of get through 367, whether it straight breaks through or it kind of flags off of that and then continues, I think this has an opportunity to get all the way back to 386 to 404, right? So, point of confluence for me. Break through 300, make its way to 324. If it can turn 324.68 into support here, I like the long on some kind of consolidation or just hold above that level. And I'll look to get into this name. Once again, right, this is pretty damn close to my average or where I added some shares on. I still have some shares in my other account, my 401k and shit like that. But for the ones that I alerted and I took, I closed out of those, and I can get right back in essentially where I added those. But as I said in the previous clip, take this rally with a grain of salt, right? You always want to be a little bit cognizant of kind of what's happening, right? In this window that we have until March, a lot of people are probably searching for a bottom, and this usually tends to happen. If you guys remember 2022, during that bear market, everybody was max long every single bounce, and all those bounces just ended up becoming lower highs, and we kept selling and selling and selling, and eventually everybody got fizzled out of the market. Everybody got really quiet. When the real bounce came, nobody really had any cash, or everyone was really timid. So it's just important to just let price action reclaim old levels, let it kind of firm up around previous supports. So 324.68 is the mark. I think we can trade options up into like 370, 380, right? And then look for a bigger move up into 386 to 404, right? Very, very simple chart here. I like the weekly and kind of how it gave a little bit of a look on this, and it's all the same, right? A lot of these names all have the same, right? Pretty much a pullback into the 618 and a Friday wick that really created this weekly look, but a lot of them have come down into discounted call entry points. but it's about letting buyers really forcefully push this back up and prove they want to hold previous supports and not just kind of sell out. And ideally we can move higher from there. But remember, this is a product of time. It's not just a product of price. I always try to emphasize that. There's a lot of timing aspect that comes into this before a bottom can be found, especially during these corrective states, right? So those are pretty much the only longs I'm considering. If a lot of these look really weak on those bounces, right? Let's say like Tesla, for example, pushes up into 324 and it looks pretty weak. Google looks weak, and a lot of them don't give me the entry criteria. I want to show you guys SPY and kind of what I'm looking for, because I think that could be the short side vehicle if these names look weak on a gap up, or they just look overall weak going into those resistance levels. Okay, and SPY, guys, you gotta remember, I said take this rally with a little bit of grain of salt. We expected some kind of bounce. I mean, we've had 1, 2, 3, 4, 5, 6 days of red in a row. A little bit of a snapback rally was expected, but and we've established this is pretty much picture perfect Wyckoff distribution, right? With our buy climax, up thrust, UTAD here. We expected a break back down and then an LPSY, right? Which is last point of supply. And usually this is a mark back up into the midpoint or the equilibrium. We could also use our EMAs, or you guys can use a very simple Fibonacci from your swing high from the UTAD to wherever the low is found, back up to the 618, right? Just a very simple way to kind of go about this. So if we kind of move up into the 601.47, aka the 618, right into our daily 9 and 21 EMA. The 9 is the blue, 21 is the red, and we see some kind of bearish print come off of this, right, with high volume. I think it's worth taking a shot off of this to go short once again to fill the gap here, and this is a little bit sneaky. If we kind of tie down into the lower time frames here, you guys will see that it really actually never filled the gap, which is a little suspicious. We got very, very close off of this, but we didn't necessarily fill that CPI gap, which is very weird in my opinion. I don't know why it didn't fill it to a T, but yeah, I would expect some kind of gap up. I'm just going to be watching this to see how we end up kind of, where we kind of form our pre-market at. Overall, looking at the daily in terms of volume, the bar itself, and seeing if we get some kind of signs of weakness around the 601.47. And then from here, guys, let's say, it doesn't always have to play out, but if the distribution starts to kind of no longer be the thesis, I think the real easy way to tell would be if it can claim above the 618 and really hold above the 21 MA here on the daily, right? This red line. If we develop some kind of daily close above this, we really start to kind of build out either multiple hourly candles, daily candles against this 21 EMA. I think this is going to be our sign that that was bottom, right? If we can kind of just hold right around here, right? As I said, I think this gives us that rally up into that dark pull print that we saw up around 610.38. I think that would be an applicable long. If you don't want to trade SPY itself, like I said, Google is probably a really good candidate, one of my favorites. MU would be a good candidate, but it's important just to see where we open, how we look into these EMAs on the daily, tie it into that 618. And then, like I said, that CPI gap technically didn't fill. If we do see some kind of bearish result off of the 601.47, right, or the EMAs itself, I really think that this has a good potential to do something like this and then fade back down, possibly have a progression gap bounce here around 590. Maybe that gives us another lower high, and then a move back down to actually fill the 582.19 gap, right? Maybe a little bit of a breach under, push back up, hit there, and then I think this could really start to kind of vomit into the lower levels, right? Obviously, this is a big source of liquidity here at 575, but from there, guys, there's a sneaky gap, and I've talked about this one for a really long time, right? It's down here. Where is it at? We can remove 565. I don't really care about that too much. It's way back here, guys. 561. Right, unfilled gap from way back when. Every other gap has pretty much been filled, at least to the downside, besides this one. I think this could be a really sneaky target for this to really pull back down into 561, and then that be our bottom, and then it starts that rally that I was talking about, right, where it ends up having a big move back up to reclaim 575. We can hold 575. You guys kind of get the picture, right? But then we can really start to make our move up, and that would really stop out a lot of the longs, in my opinion. So something just kind of keep your eyes on, just moving forward, right? This would obviously have to really form really quickly. It's beginning of March, so we have about like 15 to 20 days for this to start going. I would think we would need some geopolitical news or something like that, which things are kind of setting up in the headlines right now for something like that. Obviously speculative as of now, so it's important just to watch price relative to time, kind of let things play out. But this is definitely something I'm interested in. We also take a look, right? I mean, you guys kind of know Qs have led the entire markup. Very similar, right? We saw SPY didn't fill that gap. Take a look at what QQQ hasn't filled either, right? This is that big gap fill from the election, right? The election gap is filled on SPY, never filled on QQQ, and Qs, right, did catch a bid at the top of the gap here, and it's pressing back up into this old break of structure here, right around 510. So, you know, Qs could be the kind of the indicator as to where that short side trade could come from, right? If we see some kind of weakness around 510, it ends up breaking back down, and we see some kind of rejection, you know, maybe a sweep above like this, and then it breaks back under, and then it rejects. That could be the sign for the short on SPY, or you can, you know, alternatively take QQQ itself. That gives us that move down into 492.21. Finally fill the election gap and maybe see a little bit more slippage underneath. That will kind of result in that 561 target I'm talking about. But yeah, just kind of important to tie the two together because, yeah, I mean, it's very apparent in my opinion. If we take a look at the weekly as well, like if we just jump out to the weekly, let's go to SPY. All right, obviously this candle looks good. It looks like you could get some kind of bounce here, right? High volume, lower wick, obviously. But if we take a look in like just from a simple EMA perspective, right? It doesn't look the craziest. It doesn't look the best. If we take a look, do I have my monthly on here as well? Monthly doesn't look the best, right? That's a pretty fizzled out, exhausted monthly candle. So just kind of stay frosty is the best thing I can say, right? We're going into a 2-week window here, right before FOMC, right? I could see the markets coming down a little bit lower, right? And trying to get people to go max long off either headlines or, you know, the fact that the market hasn't had a correction like this in a while, right? We haven't had a move down like this in a really long time. So people were max leverage long. I've mentioned that multiple times. I think I brought up the Schwab report. I brought up the IBKR report. People were margined out of their mind at the highs, right? So these pullbacks here are really detrimental for a lot of people, and you can really see the distribution schematic playing out. And you know, a lot of people will continue to average down, continue to buy the dips, and a lot of these result in much lower lows than anticipated. So I'm just staying frosty here. I have the plays that I think could work alongside, but overall, right, if things don't shape up the way I want with those old supports turning support once again, right? Google, Tesla, MU. I have a short side available to me as well, right? And kind of using that in tandem with QQQ off of that 510 spot, and just seeing what we end up looking like if we get some kind of gap up. So that's pretty much going to be it, guys. I'll see you guys on Monday. We don't have a ton of data this week. We have PPI, I believe, and then next week at the end of this week we have NFP. Let me double check my calendar real quick. Yeah, so PMI tomorrow, Tuesday, no data. Then we have PMI services on Wednesday. We have NFP on Friday, which is always big, right? You guys kind of understand the NFP reversal. So if we gap up, right, we could see a reversal towards the end of the week. Really just important to kind of watch, and I'll mark it as well with trade ticks, kind of looking at whether they're bidding the market down or putting asks higher to kind of mark the price up. And we also have Fed Chair Powell speaking on Friday. And then the following week, we have JOLTS, CPI, PPI, right? A really big week, 2 weeks out. And then after that, going into 3 weeks out, right? 17th through the 21st, that's when it gets really big. That's when we have FOMC, and that will be right into our OPEX window as well. So really big 3-week period here, guys, where we really got to lock in, tighten up. And then I think we're really going to have a major opportunity, guys. Like I've been thinking about, if I get, 30, 40K on an MU position, that has potential to go 300x, or not 300x, but 300%. And that could be insane, right? That could be absolutely insane to set us up into summer. So that's pretty much going to be it, guys. I will see you guys tomorrow, and we'll just kind of take it bit by bit, all right? See you guys then.